you approach a lot of things in life with that mentality, you'd be very surprised how many things sort of just come your way.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hennche. Welcome back to The Path to Wealth. I'm your host, Hennche, and today we have the pleasure of speaking with Omar Morales, an esteemed associate at Berkadia. Omar is a seasoned real estate professional specializing in selling land, multifamily properties in the vibrant market of South Florida. With an outstanding track record, Omar has successfully helped in closing deals totaling way over an impressive $3 billion. Originally from Honduras, Omar currently resides in Miami with his family, giving him first-hand knowledge and insights into the dynamic real estate landscape of the region. Today, Omar will share his invaluable perspectives on why Florida presents such an exciting and lucrative environment for real estate investments. His deep understanding of the market, combined with his experience and success, makes him a true authority on the subject. Welcome to the show, Omar.
Thank you, Hannes. I'm looking forward to the conversation.
Yeah, 100%. And maybe we start a little bit. Why are you in real estate? What attracted you to real estate in the first place?
Well, I think growing up in Miami, you realize, at least when I did in the early 2000s, a lot of people were just in real estate. It was one of the primary drivers of the economy down here. That's now changed, and you have a lot more tech and crypto and businesses flourishing here. So you just sort of fall into it. I'm sure if you were in San Francisco in 2010, you fall into the tech scene. And then fortunately, you hear this a lot, but it's physical. You can see it. So as I'm driving to my family's house, a restaurant, I'm like looking at the land and buildings that I'm helping put together and sell. And it gives me a big sense of community to be helping build the city in a very small way, but changing the skyline.
I think that's a cool way to look at it. It's like, once you get into real estate, you also never look at the landscape the same way again. Like now I look at buildings and lots in a completely different way than before I ventured into real estate.
That's exactly right. Yeah, when I'm driving and I see two cranes up and I'm just like, oh, look, so-and-so finally broke ground. They're building 400 units here. The lender was this, the LP equity was that. And it's really interesting. The city sort of comes alive for you.
Yeah. So you're actually one of the few people we had on the podcast that are so South Florida focused. So I really would like you to speak to why you're so bullish on South Florida.
Yeah, absolutely. I think what's happening big picture is you've got both international demand and now you have a lot of domestic demand, right? So Miami has always been sort of a hub for international tourism, but now it's becoming an international destination. And then domestically, you had the same effect where Miami and South Florida were tourist spots where you go and spend the weekend or relax by the beach. But now you're having people buy second homes, third homes, and they're changing their primary residence to Florida because of the tax benefits, and Miami because of the culture, the diversity, the economy. So the reason why I'm so bullish in South Florida is because I see celebrities from LA, tech people from San Francisco, financiers and entrepreneurs from New York. I see developers from Canada. I see Switzerland and German-based funds coming down here. Latin America, they joke here in the city that Miami is the capital of South America. And you just saw yesterday the news that broke that Messi chose Miami over a $1.6 billion offer to go play soccer in Saudi Arabia. Yeah. So you just have this convergence of capital and demand into this landlocked region, right? So if you look at South Florida, you've got the Atlantic Ocean to the east and you've got the Everglades to the west. So South Florida is actually like a sliver. Yep. It's not like Texas, which is a lot of land and places to build out. So you think about hundreds of thousands of people moving down here, and then you think about limited land and limited supply, and it's just simple demand supply economics that everyone understands, which makes me very bullish here.
Yeah, it sounds a little bit like the original success formula of Manhattan. You know, you're just landlocked, and in that same sense, you have all these people attracted to the economy and the lifestyle of that vibrant place. Just that the weather, and I think overall the quality of life in Miami is a lot higher than in New York.
1,000%. So, I mean, I have friends now very close to me that are moving here from New York. And I think what's interesting is, I mean, Manhattan, right? It was 100 years, it was a century of a generational shift. And I
Yeah,
think we're like early innings for Miami, and we're gonna see this another 100 year shift, sort of floating this way, little by little. Although a lot of it has been accelerated, primarily because of COVID. But I think what's interesting is if you look at New York, it just looked like a place that you had to be. It didn't
yeah,
matter if you were in a studio with no washer and dryer, facing a brick wall with no natural sunlight. You were
yeah,
like, this is where I have to be, right?
yeah,
So now the value proposition of Miami is like, for the same price, you could be overlooking the water, you can be 15 minutes away from the beach, you can be making the same money. And after taxes, you're actually making more money. And I think with remote work and how hybrid the work environment has gotten, people are now thinking about work where they're saying, you know, in the past, I feel like you said, I want to be a banker, I got to go to New York. I want to be a celebrity, I got to go to LA. Now people are like, where do I want to live? And then what do I want to do? Because
yeah.
work is so global now. And I think when people decide where do I want to live, Miami still offers a very strong value proposition.
Yeah, 100%. I think the quality of life there is just different. I was just visiting a friend of mine in Tampa, and he said every day of his life he feels like he's on a vacation, and he still earns incredibly well. You know, his quality of life is there. He has incredible connections. So all of that really speaks to the overall region.
I thought, yeah, 100%. When I look over my office window, it's, South Beach, yachts, like people playing tennis. I have a view of the bay, and it's beautiful, right? And it's just, I'm happy. Like, there's no other place in the world where I would rather make a living than Miami.
Yeah. So have you ever looked at the flood maps of Miami? Like I actually dove into that last week for New York and different other cities, including Miami, kind of the projections of where we're headed in terms of flood maps. How does that kind of influence the investment landscape that you're part of? You know, you're selling those multi-million-dollar multifamily properties, including land in the middle of the city, but a lot of that is actually part of flood maps. How do the investors that purchase those properties, and maybe also your own understanding of what that could mean for your own livelihood in the future, how do you look at that?
Yeah, I think it's sort of like I have investors now that are looking at San Francisco, for example, and they're saying, the sentiment is that everyone's leaving San Francisco and like it's not a place to be. And they're like, listen, if I get off the internet and I go to San Francisco, it's still flourishing. People still want to live there, right? So I think like the media sort of exacerbates a lot of things.
Yeah,
Not that Miami doesn't have issues with flooding when there's like hurricanes and things like that. But I'll tell you the two things that I've noticed that really impact how I feel about it. 10 years ago or 5 years ago, if there was a hurricane or if there was prolonged showers, Brickell, for example, which is like the Wall Street,
yeah,
call it neighborhood of Miami, Brickell would have, an inch to 3 inches of water for like 3 days, right? Because it just took a while for the water to flow out. We've had a lot of rain recently, and they've put so much money into technology that sort of flushes the water back out to the bay.
yeah,
And from a real estate standpoint, now they're requiring a lot of buildings to have a higher elevation, right?
mm,
So you need to start the floor at a higher place. One of the most famous developers in South Florida jokes, he's like, when I think about flooding, I know that if I start my building 10 feet higher, I just bought myself another 200 years. So when you have local
yeah,
developers still buying waterfront land, like if you saw the news article about David Martin, he bought a 15-acre piece on the water for 1.2
yeah,
billion. I'll tell you, there's still, I don't have a crystal ball. I don't know what the city's going to look like in 100 years. If it really becomes an issue, I think there's enough real estate at risk if it were to be an issue, where I think solutions will be had. And I see us already proactively getting ahead of it. I saw Mayor Francis Suarez, and what he was saying was, we're actually the most resilient and prepared city in the country for like hurricanes and water and natural disasters because we are trying to get ahead of it. And he says, if you put New York with the hurricane intensities that we see, like their subways would be flooded. It would be 10
100%.
times worse than what we see here. And I've had guests and friends tell me that in New York, I forget what storm in the early 2000s, where like the subway was completely flooded.
Yeah. It was Hurricane
So
Sandy.
probably Sandy. And I'll tell you I sell a lot of real estate, and a lot of it is ocean. Right now we have an oceanfront property that we're working on. Yeah, when I talk to 100 potential buyers of a property that's worth 30, 40, $200 million, out of 100 buyers, we'll have 5 of them that say, hey, our investment committee is not comfortable being this close to the water.
Yeah.
Right. But you've got 5% of those guys, and you still have a lot of demand saying, I think we'll be fine for us to make this investment decision.
Yeah, we've definitely seen some insurance companies kind of tightening up their underwriting, and some of them even pulled back on certain markets in Florida, given the impact, that the natural disasters have. So I think there is maybe some legit concern. Obviously, insurance companies are in the business of making money, and if they feel like they're getting hit by a hurricane too often, they just want to pull out. But it's like we've seen some of our other multifamily investors actually struggling to get a new insurance on their properties, especially also in the area that lately got hit by a hurricane.
Yeah, insurance is definitely a huge problem right now, not only in Florida, but also in California. I heard because of the wildfires. Now there's only 2 insurance providers in California. In Florida, it's basically 1. So it's definitely an issue. I think as it relates to multifamily, which is the business that I most work in, I think you'll definitely see some margin compression, right? Like your profit margins, your net operating income, because what happened over the last 36 months, if you've got your revenues and your expenses, is revenues went like this because rents grew very, very high. And now I think with pricing up higher, taxes will get higher. And with insurance, with what's happening, insurance will get higher. So you'll see some profit margin compression. So yeah, we're seeing that. And I think for maybe some people on the podcast, like some of your audience, it's also an opportunity for bigger institutional players to have like umbrella policies that allow them to get more aggressive than like a private individual would in an acquisition. But it's definitely an issue.
But I think between everything you just laid out, if I sum it up, looking at 100 years, I'm pretty sure you and me will be dead by then, So if you, just like the local developer said, if you put that extra 10 feet in, you're buying yourself so much time. It's definitely an investment opportunity. And I think it has all of the economic drivers that you were pointing out. And the quality of life is so high. So I totally understand the sentiment of you being so bullish. Many of our guests are more in the Texas region. This is also where we own property. We're not present in Florida yet at all. And they all very bullish on Dallas, which obviously, just like you pointed out, it has so much land around. You can basically build and place another 10 million people there without a problem.
Yeah, no, that's exactly right. So a lot of the people I talk to are sort of already convinced that South Florida is a market they want to be in. But when I go to these other markets, I'm not as proficient as somebody that's living and breathing those other markets, but I just see the unique qualities that South Florida has that others don't. But I think an interesting thing, if you have, audience that's buying multifamily is, South Florida does often trade at a more compressed cap rate than other markets, right? So I've had the conversation with some clients where I say, listen, if you're trying to look for blood in the streets right now, and you're trying to buy a property that's distressed and sell it in 2 to 3 years to make your promote, you're maybe better off looking outside of South Florida in more secondary or tertiary markets where sponsors are going to get caught more than they are in South Florida. Give you an example. We sold a property a year ago where the buyer was projecting 30% rent growth. It was, call it $150 million property. And they were projecting 30% rent growth after that property had already grown rents by like 30 to 50% 2 years in a
Yeah,
row. And we were like, God bless,
not
like, like,
not
yeah,
gonna happen.
I hope you're right. This is great. So they bought the property and they just like sent us, I reached out to them and I just like, out of curiosity, I'm like, hey, like, how are the numbers going? Like, would love to sort of look at the property again. To my surprise, they are getting 30% rent growth for a
Oh,
third year in a row. And I'm just like, that is crazy. So mind you, they bought the property. They bought the property for like a 4 cap, and now we're
yeah,
underwriting it to like a 5 cap. So the
yeah,
value is sort of flat
yeah,
because they got 30% rent growth. So I think about it like, had they had the rents decreased by 5% and the cap rate elevated by 100
yeah.
basis points, like this property would be underwater. So when I see incidences like that, I'm like, listen, if you're looking for blood in the streets, your time may be better served outside of South Florida. Not that there won't be distress here with some sponsors that levered up and bought at the top and things like that. But I think it's going to be very few and far between.
Yeah, and the interesting thing is we've seen that in Florida for the last couple of years. So one of our partners who was very, very active in the South Florida region trying to pencil out deals, but he looked at it through the eyes of his other deals, that are in the Sun Belt. And he couldn't make sense of it. And that was around 4 or 5 years ago. And in hindsight, he wished he would have bought every single deal he looked at.
Yeah. Well, I think whoever we talked to in any market said 5 years
Yeah.
ago, I wish I would have bought everything. But yeah, I think the way to think about it is like, it's hard to underwrite so much appreciation in our type of business, right? You
Yeah.
underwrite it with cash flows and levered IRRs. But again, you couldn't have looked at New York in 1970 and said in 2005, my property is going to appreciate 5x or 10x or whatever it is. But when you look at, again, just the demand and the fundamentals, it's like, yeah, you may be buying a 5.5 cap in the Sun Belt and it might be a 475 cap in Miami, but there's a reason why it's a 475 cap, right? There's a reason why a lot of your audience probably is not buying eight cap hotels, 8%
Yeah.
cap rate hotels or 10% cap rate offices. You can go find yield over there, but there's a reason why they're 8 caps and 10 caps, right? So yeah, I've seen in South Florida and Miami that the demand is strong enough where even if your projections are off from a cash flow perspective, your pro forma, the demand, if you can hold long enough, sort of saves you and makes it a worthwhile investment.
And I think this is part of the art of the multifamily real estate investment. As long as you are able to hold, you don't really lose money. Like, so as long as the underwriting has a margin of error, where if rent growth is not just like it's projected and the interest rate caps are in place and you actually are able to ride out the market valleys, you don't really lose money if you buy in prime locations. And I think this is what I've seen around the very sophisticated partners that we work with. They are looking for location. You just want to be in prime markets because this is where you have that massive long-term downside protection.
I couldn't agree more.
Yeah. So let's shift a little bit into more of your personal story and how you grew into the position in terms of work ethic, because, looking at the landscape, from what I gathered, you're somebody who was willing to double down and really throw yourself into it at a time where other brokers maybe weren't willing to put in the work. And I think that's something very worthwhile to point out too, because there's other people in the industry who's wondering how to get in, how to carve a niche for themselves. And I would really like to share your story and how you did that for yourself.
Yeah, I mean, I can go pretty far back. I think what's important to understand is, my parents didn't graduate even high school. They came to Miami from Honduras just to give my brother and I a better education and better opportunities. And why it's important is because it has made me very sort of hungry, but more than hungry, it's made me very grateful for the opportunities that I have here in Miami. And I don't fault anybody that sort of has grown into wealth and born into wealth and stuff like that. But like, if you're in New York and you're already flying private first class and going to the Hamptons and stuff like that, I can see why on a Friday night you don't want to be underwriting and learning something at midnight, right?
Yeah.
I was sort of like, this is the coolest thing ever. I'm working on a $25 million building that is a mile away from the house I grew up in. I'm like, whoa. So I was so excited and grateful about it that it allowed me, to your point, to double down. So I think I'm not any smarter than any other broker or work. A lot of people work very, very hard. I think what was unique with me is I decided to stay in Miami and in South Florida in 2015 instead of going to go accept a job in New York to go do
Yep.
investment banking. And really the decision was just like, I don't want to leave and go to New York or anywhere else to then just come back to South Florida to be with my family where I want to be long term. So I just want to make it here. What I didn't realize in hindsight was that there wasn't that much competition for people working like 100-hour weeks, right? In Miami. So at a very early age, when I was 21, 22, 23, and I was working very diligently, responding to clients Saturday, Sunday, and like, outperforming their expectations, which were low of people in Miami at the time, it allowed me to just really grow my reputation faster than I would have imagined. So within like 3 to 5 years into the business, I was doing deals with the most prolific developers in South Florida. George
Yep.
Perez, David Martin, Isaac Toledano, all these guys. And if had I gone to New York, same persons, Omar had gone to New York, it would have taken me 15, 20 years to be doing deals with the most prolific developers in New York, probably because the competition's so fierce. So I think I did get lucky in that sense. But even today, I'll give you an example. Today, the market is slower, right? There's a bid-ask spread and there's not much transactions. I am always at the office. I am talking to guys like you. I just got off the phone with a guy that owns some land in by Hollywood. And I'm like, what are you thinking? What are you doing? Where do you see opportunities? So I think right now is also a very special time as a broker to reach out to your clients and just be friendly with them and get to know them better than you did 18 months ago when everybody was running around making money. Now I'm
Yeah.
playing paddle with clients and prospects. I'm going to dinners. And then when they go and transact a year from now, 5 years from now, they call me because I've been in front of them this whole time. So it comes just from like having fun with what I do, having fun with my clients, having fun in the business, which translates to me probably, working with a better attitude and harder than the next person. I think that's been a big part of the reason why I am where I am.
Yeah. And I think there's two things that really ring true with me here is that, it's the time, and we usually joke about it, or my syndication lawyer jokes about it, it's the time to raise capital when you don't have a deal, And in the same way, it's the time to be with potential clients, prospects, be out wining, dining, be on the paddle field and just kind of do that with them at a time where they don't have a deal flow right now. And as you said, 18 months ago, everybody was busy. Nobody had time to do these things. So I think right now is a great time to do that with them. And the other one is that, do you feel like it's still a time in Miami to have that opportunity? Or do you feel like there's, given where Miami went over the last 5 years, the opportunity closed and it's more competitive, just like New York City?
It's more saturated now than it was 10 years ago. I think a good example that's relevant to you and I is like podcasting, right? Had you created the Hennche experience in 2012 and this is episode number 852, you would
Yeah.
be Joe Rogan, right? And right now you're like, hey, the market's saturated, but I like talking to people. I like learning from people. So let me just do it. If the outcome is great, amazing. If the outcome
Yeah.
isn't so great, at least I had a nice conversation with 52 people and tomorrow 53.
Yeah.
So I think, relatively speaking, yeah, it's harder today than it was in 2015 when I didn't know a single Ivy League business graduate that wanted to come to Miami. Not one. Now
Yeah.
I am getting calls from people that are older than me, graduating from Harvard, saying, can you please help me find a job and like connect me with so and so company down here? And I'm just like, here is like a Harvard MBA graduate calling, a guy that's 4 years younger than him or whatever it is, help connect. It blows my mind. But now I'm like, thank God I'm not competing now with this Harvard guy that's probably way, smarter and dedicated and whatever than I am. But like, so yeah, it's gotten more difficult, but I feel like
Yeah.
if you still pursue the opportunities with grit, persistency, optimism, you're gonna enjoy living in Miami. And if you end up being worth tens of millions or just a couple million, or you end up making 150 grand a year, whatever it is, like if you like Miami, come to Miami and give it your best shot.
Yeah. I don't think that the Ivy League guy is more competitive than you. He might have more computing power up here, but I think at the end of the day, the persistence, consistency, and the work ethic you have and who you are as a person speaks louder than that.
I appreciate that. Yeah, no, it surprises me too, because having not met any of them 5 years ago, I would have thought like this guy is like, the LeBron James of talent in the world. And when I sit them for a coffee meeting, I sort of notice, I'm like, wow, they're not as interested in me and like asking questions and being inquisitive as I would have been in their shoes. And
Yeah.
I try to help them, and I open doors to them, and I give connections to them. But I do notice, I'm like, well, this person isn't any more special than I thought he would be. But definitely in a resume, it jumps out.
Yeah. See, and this is the beauty of maybe the journey of an immigrant. Like your parents came here, I came here. And we come with a different lens, a different perspective, a different willingness to hustle or put in the work. And it also demystifies whatever we thought that is like the next level. There's many stages that I blew through where I might have not thought I would ever get in my life. And I'm like, well, this is actually not that special. It's just something that we hold in as an idea in our head.
Me right now, I mean, I'm working on $150 million deals, and the people outside looking in are like, oh my God, Omar. And I'm like, dude, imagine you trying to sell a house for $600,000 that is worth $550,000. I'm doing that with $150 million buildings. It's nothing special, but I'm in this position, and obviously, for various reasons. But I agree. But I think the perspective is everything. A good example I like to give is when one of my clients, especially 5 years ago, when a client reached out to me at 10:30 o'clock at night, right? I'm assuming they're like trying to go to bed, but they need some help with something. I remember vividly, it didn't matter if I worked all day. If somebody sent me an email at 10:30 o'clock at night, my immediate reaction was, this person could be sending that email to anybody else in the city or anybody else in the field. He has chosen to send me this email at 10:30 o'clock at night. Thank you. Let me please try to help. So I would jump on it and be like, hey, like, absolutely. Like, I'll look into it now. We'll probably get something to you first thing in the morning. And instead of looking at it as like work and like, oh my God, this guy is annoying me at 10:30. Again, I was so grateful for them reaching out to me, no matter the time, that I think that sort of mindset, I think has a lot. Being an immigrant and stuff like that, and having that perspective helps. And it's funny, like I just see it with other people that, 9 out of 10 people get an email at 11 o'clock at night and they roll their eyes and they get stressed and like, oh my God. And I remember I'd like be smiling, trying to see what someone needed from me at that point in time.
I love that. It really speaks to it. I'll just give you a simple example. 2 days ago, we hired a new videographer because we needed some video shot. And I contacted maybe 10 people. There was like maybe 2-3 immediately responded to it. There was one guy who was like, he told me he will call me in 10 minutes and didn't call in an hour. And then he said tomorrow. And then he called me. And by the time he called me, I was like, sorry, we already have somebody who's a good fit.
Right. Even if the other guy would have had a better track record, a better resume, the guy that's like, yeah, absolutely, I'll jump right on and I'll help you out, and just like is excited, you're like, I want to work with this guy. I mean, I'll give you a real world example. We just won a listing, which is like, what we compete with, and our competitor had sort of a pole position to win this listing. They sold the client a piece of land. Now the client has built a building on it and has asked us to sell it, not the people that sold them the land. Yeah. Also, the competitor has a bigger track record for that market specifically, has been in the business. I've been in the business for 7 years. They've been in the business for 20, 25 years. So we were like not favored to win this assignment. And I knew that coming into it. I really wanted the assignment because I believe in that market, whether I've been in it for 25 years or I've been in it for 6 months. So I was like very, very persistent with the CEO of this company and saying like, listen, I am the person that's going to sell that deal for the most amount of money possible in this market. I know the comps. I toured the building. I met your property manager. I met all the property managers around the area. Like, I am your guy. And he gave us the assignment. And within like 48 hours, our competitor's calling me and he's like, how the hell did you just win this assignment? And I was like, I don't know. I just reached out and said I'd love to do it. And I think, again, the person in the pole position that probably took it for granted wasn't following up, wasn't doing his homework, wasn't, doing these things. So it's just like, if you approach a lot of things in life with that mentality, you'd be very surprised how many things sort of just come your way. We spoke about this before recording of the harder you work, the luckier you get. And it's just been fun. Yeah. There's another quote that I like a lot. It says, the way you do anything is the way you do everything. Which I think is so true. I'm like very sort of, I like to work hard and I'm intense. And if I don't want to do it, I'm not doing it. But if I want to do it, I'm going to do it better than anyone else. So I just pick those things very carefully, and it's been a lot of fun.
So how do you get the things done that you don't want to do?
Delegate. I delegate absolutely everything. And yeah, when I was sort of, now I'm more client facing and connecting dots is my value add to be bringing in deals. But when I was an analyst, I started out on the buy side, on the principal side, buying value add multifamily buildings. When I was there, I understood that my value add to the team was underwriting deals, right? It was like knowing the numbers. So I sort of took what I wanted to do and put it aside and said, now's not the time to be connecting dots. Now's the time to be underwriting all the deals I'm getting sent. So there's moments in your life where you have to double down on things that maybe are not your strong suits or things that you don't want to be doubling down on. But it's also the mentality of like, it's not about me, it's about the team I'm in. And I need to be adding value, how I could add value to this team, not how I want to add value to this team. So, but now I'm in a position where I can very much successfully delegate most of the things that other people are better at than me.
And I think that's the beauty. You honed in the skins on something that is a crucial piece to success for you still. You learned it. You know what BS would look like. But now you're successfully delegating it to someone who is actually better at it, which makes the team effort come out even better. But you can also you can totally call the BS if there's any.
100%. My partner that I've been working with for 7 years now is like a introverted, quantitative type of person. And we are like a perfect match because he is like, loves to do all the things. His strengths are my weaknesses and his weaknesses are my strengths. But to your point, when he sends me something like a model, I can like, in a heartbeat, I'm like, I think this little lever here is way too aggressive. Like we gotta put that down a little bit. So I know the numbers. He does it passionately, and I do other parts of the business passionately.
Yeah, and I think that's the beauty, and to know yourself to such a degree. What was that process like for yourself to maybe uncover what you're actually good at and passionate about, and where you can add the most value to the team?
It's a really good question. I like reading and I'm sure, given that you're in podcasting and probably Twitter and all these things, Naval Ravikant.
Yeah, of course.
I heard a podcast with him and Shane Parrish, I think in like 2018, before podcasts were cool. And it like changed my life. And I think finding little nuggets like that, I've really delved deep into sort of trying to understand my strengths and weaknesses and myself and what I want for my life and things like that. And as you're learning and thinking about those things, you don't realize actually how much it's benefiting your career. While you're doing it, you sort of just think, oh man, I should be thinking about phone calls on real estate, or I should be underwriting. But I was spending some weekend nights and weekday nights sort of introspecting. And now fast forward 10 years, I'm still introspecting, but I'm like, wow, it actually really helped me in my career, knowing my strengths, knowing my weaknesses, knowing what I want. So it's just a lot of reflecting. I think, to give you an example, twice a year, I'll just, on my iPad, I just start talking about how I feel about my family, my relationships, my money, my financial means, my career. And then I go and revisit what I thought when I was 23, 24, 25, 26. And the biggest takeaway for me is that like everything I was worried about and trying to figure out in those moments in time were so not meaningful in the grand scheme of how things play out. So I'll
Yeah.
go read like this thing that I wrote when I was 24, and I'm like, oh my God, I remember I was like so just freaking out about this deal or this relationship with this client and whatever. And I'm just like, everything just works out. But it does take introspecting. It does. And I think for me, fortunately, one of the good things about living in Miami, this is pros and cons. A lot of people know Miami as like going out to 11 and space and live and then wake up and get on a yacht and just spend too much money and be drunk the whole time. I joke that if you grow up here, you get through that phase earlier on in your life.
Yeah.
So by the time I graduated college, I was already like, okay, I'm done partying. I want to be serious now. Versus I see people that honestly, they'll go and graduate from like a Yale MBA and they went to a private high school and now they went to a whatever. They've had a very strict and
Yeah.
successful academic life, and then they come to Miami with $150,000 salary, and they go
And
absolutely
go ape
crazy.
shit.
They go crazy, and they're like drinking on Tuesdays and Wednesdays and Thursdays, and it's just like it's like a little kid in the candy store, and I'm just like, this is so funny, right? Like I got this out of the way and I didn't notice now it's a benefit to my career. But fortunately, having gotten that stuff out of the way early on, it has allowed me to sort of spend more nights introspecting, thinking about life, what I want for myself, which has been helpful.
So, what are you currently maybe spending the most internal thought on? Maybe what's Omar's challenge 2023 right now that you're trying to crack the nut in your head on?
I mean, it's honestly a phenomenal question. So for me, realistically, is this audience I've built on social media, on like Twitter and LinkedIn and Instagram. It has a reach that I am still learning and realizing how wide it is when I post things and I have very influential people reaching out. I'm like, whoa, this is very impressive. So my big sort of thought process right now is how I can continue leveraging that and how much more time do I put into that as to see how it benefits my sort of overall career trajectory. So right now it's trying to see, to your point, like, should I do a podcast where I talk about South Florida real estate with other South Florida real estate deal makers? And we're just
Yeah.
talking about the market 24/7. Like, would that be a worthwhile use of my time? On Twitter, should I be spending more time actually doing threads and things like that? So realistically, it's the big decision that is where to invest my time, right? It's the most finite resource. And then right now it's do I spend a little more time boots on the ground on the market, calling clients that I know own real estate, or do I spend more time in this like ephemeral social media world that has sort of uncapped upside?
I think my personal take on that would be that one has more of a marketing value where you get an immediate transaction maybe, and two has a branding value where you yourself become a thought leader and a brand, which I think in the long term is building like a skyscraper. And it is, you know, Seth Godin. He
Yeah,
has
of
a book
course.
on
Purple
what is
cow.
marketing. Yeah, and he speaks about it, how he evolved from marketing to brand. And Alex Hormozi also speaks about it. And he thinks that like both of them actually align that brand is like the highest of the both because, you know, it allows you to do things like, for example, Warren Buffett is a brand. He can do deals that nobody in the world can do because people proactively reach out to them because of who he is and they know it because of the brand he has. So I think in that sense, you're maybe on a pathway where you can take a left or right and you can determine for yourself how much you want to leverage who you are to the public, and you want to find a distribution channel that feels right to you.
I think that's right. And what I like most about social media, as I've continued to learn it, is that if you are just authentically yourself, A, people resonate with it, and then B, it's easier to like post out content just being who you are, and it
Yeah.
really shows in the content. So it's not like you creating an image that is not yourself. It's not you creating a brand
Yeah.
that is not yourself. It's like it's just an extension of yourself. There's a guy named Chris Powers. I love chatting with him, every month or so. And what he said was, the thing I most like about social media is that it's the best way in my life that I have figured out on how to scale trust. And he says,
Yeah.
15 years ago, you would build trust you and I over a 4 hour, 5 hour golfing range, a golf course or a
Yep.
dinner. And I've now just built trust with Hennche, right? Now with
Yep.
social media, it's like we have this conversation, 1,000 people listen to it, and 50 of them are, hey, I really appreciate Omar's attitude and his approach, and I want to do business with this person. So yeah, I like thinking of it as like a snowball, and it's funny because now it's like the brokeraging and the business I'm in day to day is sort of just the vehicle now. It's the vehicle that it's cash flowing and it's great and I love it,
Yep.
but it's allowing me to build this audience snowball. And I appreciate how media has sort of been flipped on its head, where before the companies sort of called the shots and the players were sort of begging for the companies, and now
Yep.
it's the opposite, where it's like the companies are begging for the players. So like they're begging for Messi, they're begging
Yeah.
for whatever Anthony Pompliano in crypto, or this person and this. And so I'm like, I think this is great. It's a great opportunity to brand yourself as a niche market expert. And I think, like 5 to 8 years ago, I was thinking, what's my niche? And maybe this is helpful for your audience, is like, as long as you are putting your head down and working hard, things will come out of it. Like things will sprout out of it is what I've noticed. So like I fell into multifamily and it's taken off. And now there's this book by Cal Newport. It's called, I forget the name, but like the big takeaway for me on the book is once you become a thought leader in something, you will become passionate about that thing, because people will admire you for it. People will reach out to you about it, and it'll reinforce this sort of ideal and image in your head that you're like, oh, wow, I am a thought leader in this. This is what I'm passionate about. And the data in the book was like, if you talk to people that have been doing the same thing for 10, 15, 20 years, they are like passionate about this thing. Whereas if you talk to people that just they're 2 years into something or 5 years into something, they think they're less passionate because they haven't built a brand around it that reinforces the image that they're trying to create.
This reminds me a little bit of Ikigai, because there is one component of Ikigai where it's what the world appreciates or needs, and rewards is another one. And if you have somebody that you're getting good at, something that you're passionate about, and it kind of reinforces itself. And if you have all four pillars, so you have the reward, the appreciation, you're good at, and you enjoy doing it, and then you basically have a very fulfilled life.
That's exactly. Honestly, I completely agree with you, and I think a good way to bring that in is when I was 24 years old, and I was very much underwriting and working, late into the night. Not that I'm not any, like I'm still doing that, but I remember so many people would reach out to me, family and friends, and say, Omar, like, I see you working so hard. I promise you it'll pay off. Like, just keep doing what you're doing. And my reaction was like, I promise you it'll pay off is like future. I was like, I am happy doing this now.
Yeah,
I
beautiful.
am
Yeah.
like, I feel like I already won, right? Like look at what
Yeah.
I'm working on, like I don't need to get the $10 million oceanfront house in Key Biscayne. Like right now I am doing exactly what I want to be doing. And to your point, it's because it's hitting those pillars. I'm passionate about it.
Yeah.
I'm good at it. People come to me for it. So I'm like, this could not work out at all. And I'm doing exactly what I want to be doing, which was an interest. People would always be like, oh, okay, like great. So I guess it's already working out. I'm like, it very much is. Yes.
I mean, this is like the definition of internal success. Like, if you already feel successful, like you said, the oceanfront house it's just a bonus, it just adds to the
Gravy.
comfort, the convenience, it's the gravy, but if in the pursuit of what you're doing, you already feel like that's it. And that's the beauty. And I think this is where you mentioned earlier, when you do the internal work early and you actually have that introspective time with yourself, and you're trying to hone in on that, it's so worthwhile, because otherwise you can easily put 20, 30, 40 years of enormous hustle behind something, and it will never lead to that feeling. And you might hit all the metrics of outside success, like the oceanfront house you mentioned, or whatever other metric is normal in your community or in your city or in your family, but you might completely miss it.
Might miss what you truly were like searching for. I completely agree. Yeah, I see it a lot too. I mean, real estate is a very, I think, ego-driven business. It's look at my building, look what I built, look who I am.
Yeah.
And
Look at my units, numbers, asset under management, like all of that.
exactly. And it's funny, I can tell when I talk to people how many of them are like, this is so much fun, let's do business, right? Happy. And other people are like stressed and like, I need to like, realize this profit. I need to get there to then be happy, to then be successful. And I'm looking at them like, dude, you've got 5,000 units under management. I get that you still have a lot to do and you've got a lot in your head, but you very much are successful, my friend.
There's this incredible study about happiness, and I think the magic number, and that was before the pandemic and before inflation hit. So maybe now it's more, but it used to be like $70,000 and a year in income. And after that, there is no more additional benefit by the money for your actual joy in life or happiness. So,
Yeah.
and I think it rings very true with my personal experience. There was no more additional satisfaction in earning more money. The money at that level just becomes, a means to an end for more comfort or more conveniences, maybe better views or all those things, which I appreciated, but they don't make the major difference. And I think, again, this is why it's so valuable what you pointed out, and maybe why I'm saying it a third time, that introspective time at an early age is so valuable.
Very valuable. And I think it's also very hard, by the way, and unique to
Yes.
introspect at an early age, because we live in a world where just everything's in your face and more and hotter and leaner and better. And it's hard to just block everything off and say, let me just focus on me and what I want. But if you have the discipline and willpower to invest that time in yourself, it pays dividends.
100%. Well, Omar, this has been an incredible, well-rounded conversation. Thank you so much for your time. I know we're coming up to an end here. Where can people connect with you, find out more about you, transact deals with you, buy land from you?
Yeah, however you can reach me, when you put Omar Morales online, I'm responsive. I think Twitter is where I am most active, and my Twitter handle is Omar Morales. That's OMARMORALES, but the L is a 1 instead of an L. So Morales with a 1. Hannes, thank you so much for reaching out. This has been a pleasure.
Awesome. Thank you so much. Have a great day.
Absolutely. We'll keep in touch.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.